Hello traders, welcome to the LFB and our global video charting review for the 9th of March 2011. My name is Mark O'Haig from the LFB trade desk. Looking at the global markets, we're just going to run through a review of where the main markets are, what's moving them or not, as the case may be. We do have to point out that any form of trading involves substantial risk of loss. Forex trading may not be suitable for everybody, and each investor needs to run through their own due diligence. We're using a 1 hour chart review here. Each time that we can see the support and resistance areas change, we know that a new session has been started and then completed. And looking at gold bullion trade, we generate each day a neutral price point area followed by 3 areas of upside resistance and then 3 areas of downside support. We also make use of momentum candles where blue candles will indicate that we've got bullish momentum, white candles will indicate we've got bearish momentum, and we use a moving average line just to quickly indicate trend. We're very much lightweight on our technical charting outlook from a review standpoint. We've got a very deep knowledge of market mechanics. We understand what makes up virtually every single technical study, MACD and RSI, a Bollinger Band, alligators, Elliott wave analysis. All of it can be a little bit overwhelming, and a lot of traders try to cram an awful lot of technical information onto one chart. But what we've seen over the course of 30 years in trading global markets is that most traders do revert back to fairly clean charts. Just price action, support and resistance are what most would rely on. So as an example here, on gold bullion trade, we've got a flat trend. We've got momentum candles shifting from blue to white, telling us there's a little bit of indecision, but also that fair value has been found. But one thing we are noticing on the global markets at this point in time are the spreads. The spreads are much higher than the historical norm. From our perspective, we've been used to seeing 1.5 pips, 2 pips, 2.5 pips on most of the major pairs. We've used to seeing, for example, on gold, 20 cents, 30 cents on spreads, where we're starting to get much wider spreads now. We're starting to get spreads that will, from our perspective, start to confirm that lack of liquidity, if they continue this way, that could lead to a major problem during the course of the summer months. When you see very tight spreads, you know that the market has not only found their value, the market is normally in one kind of sustainable midterm trend where dips are being bought or resistance is being sold, but also the cost of interbank business is normally contained. Normally, when you get tight spreads, you've got interest rate markets that are very stable. 10-year note yields are stable. You've got just a well-being within the market. When you get spreads that widen up, and now we're looking not just at what would historically be quiet times, we're looking at spreads that run 24 hours a day now, wider than the average. There will always be variables from broker to broker. There are brokers that offer fixed spreads. You pay one way or the other. So you're paying a difference in price one way or the other. Nothing's for free. But in general, just looking at the global market, we are fairly wide on overall spreads, which tells you that fair value may have been found in the very near term, but the cost of doing business is getting a little bit expensive. Looking at silver, unlike gold, we've got quite a strong midterm trend here on silver. Gold was running flat, and as you can see on silver, we haven't got that chop and change from bullish to bearish on the momentum indicators. So unlike gold, where we would have expected, if things were going to get weaker, a break below 14.22 on gold that you could have sold possibly for $10, $11 of movement, wouldn't even think about selling into this silver market. Silver at this point in time looks far too bullish And to create a trend and momentum read like this does mean that somebody's put an awful lot of money into the silver market, not one person, a group of people, to make that cumulative read very much a buy the dip on silver. Looking at the oil market, got a silver kind of nuance to it, getting pushed higher on West Texas Intermediate. We can see bullish momentum candles. We can see bullish trend. Another one that you wouldn't want to sell. You'd be looking patiently to buy the dips. At this point in time, though, as we can see from the last 3 days of trade, we haven't been able to break and hold the intraday support and resistance areas that are preset. S&P 500 got very much the same look as gold. You can see the separation in these markets at the moment. Flat trend, ugly price action, chopping from bullish to bearish on a 1-hour chart, not able to break the near-term support and resistance areas, unable to do too much at this point in time, telling us that fair value has been found, but you've got maybe 40 cents of spread there on the S&P 500. Taking a quick look at the Dow, probably looks very, very similar. Yes, it does. Choppy, overlapping. Take a look at the Nasdaq. Weak. Compared to the S&P and compared to the Dow Jones, we're starting to get a short trend possibly starting to form. Price action here is pretty volatile. Taking a look at wheat, take a quick look through these global commodities. Gone into short mode, short trend, and short bullish momentum. Corn, short trend, short momentum. Soybean, flat trend, looking to go short. Sugar, so the soft commodities are looking weak. That may take a little bit of steam out of some of those commodity markets. Coffee looks very bullish. See the divergence between these global markets, and cotton looks very bullish. Real strange times, unique times, but market mechanics do tend to reveal a picture that you can rely on once you've been doing this for a while. Euro dollar, a reverse of the dollar index, an inverted dollar index, back to the price point that we were at last Thursday when Jean-Claude Trichet intimated that there could be a rate increase coming from the ECB. Chopping around from bullish to bearish, momentum is mixed, trend is very flat. Pound dollar, looking at the Great British Pound, a little bit weaker than euro, but a very mixed price action chart. Starting to get into a short mode, you'd be looking to start selling the Great British Pound. Dollar yen, starting to find some buyers, starting to try to break through this 83, which is a huge price point that's going to be very difficult to actually break and hold. And then the one that we're looking at as a real indicator of day-to-day momentum on the dollar is dollar Swiss, and we've just got a very disjointed chart. When dollar Swiss goes into this consolidation mode, most major pairs will be opening and closing the 24-hour period at their existing price point. So that wraps up a very disjointed week that we've reviewed so far. We're into Wednesday. Hopefully things will start to break during the course of Thursday and Friday. We'll catch you tomorrow.